And welcome to the X22 Report Spotlight. Today we have a new guest, Keith Neumeyer. Keith has worked in the investment community since 1984. He began his career at a number of Canadian national brokerage firms. Keith moved on to work with several publicly traded companies in the resource and high technology sector. Keith founded the First Majestic Silver in 2002 and is the chairman of First Mining Finance. And I am very happy to have him on the X22 Report Spotlight. Keith, welcome to the Spotlight.
Well, thanks very much, Dave. And it's been quite an interesting first week of trading in 2017.
Yes, it has. And I wanted to start off with gold and silver, and I wanted to go back to 2016 because at the beginning of 2016, we saw gold and silver. They were on the move. They were rising. And as we went throughout the year, gold and silver started to taper off. We saw a lot of paper contracts thrown at gold and silver. And I wanted to get your take on why do you think gold and silver, I'm looking at it as they were suppressed. Why do you think all of a sudden things started to go the opposite way?
Well, I think that the seller's exhaustion really occurred. I think that when you have trading occurring and there's really no real sellers around, and the only sellers are artificial sellers, for example, short sellers or sellers that actually don't even have the metal, whereby they're just writing contracts to keep prices low. There is an end to that, and we saw that happen in the end of January, early February. We saw this huge capitulation down day. I forget exactly the day it was in January, but January 21st comes to mind. And I remember, our First Majestic was down, I think 10% that day, and most of the mining stocks across the board. And it was really looking ugly. Silver hit a low of 1330 that day. I forget exactly what gold was at, but around 1050-ish in that range. And it was looking really ugly. And then all of a sudden the next day, like a light turned on and things just changed. And that's kind of when, these capitulation types of moves, are happen, and you see this dramatic change in the market. And we saw that, and nothing can really explain it except it's just simply that the sellers just disappear and the buyers are there and there's no supply, and the buyers start piling on top of each other. And you see this perfect storm of people wanting to come into the metals because they've been so depressed for a very long period of time, 5 years in the case of gold and silver. People were waiting for an opportunity to come into the market to start to make investments. And there's a huge amount of money on the sidelines just watching for an opportunity to try to catch the bottom. You had institutional investors around the planet that hated mining, hated metals, but yet they knew the valuations were so low and the prices were so low that they just had to get in. But no one wanted to get in when things were dropping. No one wants to catch a falling knife. But the second things start to turn, you start to see a 5-10% up move. All of a sudden the money starts piling in. And then you start to see the shorts covering and the longs piling on. And it was just this euphoric kind of atmosphere in the sector that moved equities up 4 or 5 times, moved metal up dramatically as well. And it was an exciting time. But come August, things were overbought. Silver got up to $21 from $13.50 range, and gold moved up nicely up to close to 1,400. And we were due for a correction. But I've been interviewed many times, and we have a system today whereby these markets are controlled by computers. So they go much further than they should on the upside, and they go much further down than they should. I'll use First Majestic as an example. We opened the year with a $500 million market cap, and we had a short position of 14 million shares. The stock hit a market cap of over $3 billion. So it went up 6 times, hit over $25 a share. And the short position had dropped to 4 million shares. Today, or at least the last report I saw about 30 days ago, the short position was 18 million shares, and the stock is now around $1.5 billion. So it's been cut in half. And this is all computer driven. The fundamentals of the company are no different than they were 2 or 3 quarters ago. The fundamentals for silver or gold are no different. I would actually argue that probably the fundamentals for silver and gold are probably better than they were, 6 months ago. Yet the metals are a lot lower than they were. And this is all algorithmic trading. It's all computer trading. And it's quite shocking, actually, but that's just reality. That's the world we live in.
So you're on the front lines with in respect to precious metals, mining stocks, and there was a lawsuit against Deutsche Bank, UBS, HSBC, and many others that were involved in manipulating the precious metals. How big is this? Do you think it just stops with these couple of banks, or do you think it's much larger than this?
Well, they don't look at it as manipulation. Manipulation is a word that's kind of thrown around, it creates headlines and so on and so forth. But this is really normal practices, and this is where, the banks or the traders who move these markets, are at odds with investors, because the traders think it's their right to move markets the way they wish. There are regulations in place today, regarding spoofing and wash trading, things like that these traders do, or collusion even, where these traders will get together and actually try to do a fixed trade at a fixed price, which is illegal. There's rules that's very clear that you cannot move a market in one direction or another to do a fixed trade at a fixed price and then move the market back to where it was originally. And these things happen all the time. And they've been accepted by the banks, they've been accepted by the regulators, even though these regulations are on the books to prevent such practices from happening. Many people who listen to me know that, my background is trading. I was on the floor of the stock exchange for 6 years. I traded equities between Vancouver and Montreal and Toronto, New York, NASDAQ. So I've done a lot. I've seen a lot. I know how the markets work. Mind you, this is back in the 80s. So, when you saw someone making, odd looking trades or doing odd looking things in the market, you saw it because everything was very visible and you could work around it and so on. But, today in this high frequency electronic market where, people are just, putting programs in place and, putting spoof orders in and so on and so forth. And the exchange can pick all this up electronically, but unfortunately there's just so much of this stuff going on that it's very difficult. And in a lot of cases, the regulators don't even understand what the banks are doing. So it's very difficult for the regulators, even though there's regulations on the books, to really regulate it in a way that protects the average person on the street. And, these regulations are meant to protect the average investor. They're not meant to protect the banks, yet the banks use them, to their advantage to try to make money, and so on. And that's where I have a beef with, and that's why I'm vocal, about the stuff that goes on in the marketplace, because, whether they want to call it manipulation or not, I think it is manipulation when you move a price in one direction to benefit yourself and hurt other people. That's manipulation. And this is big. It's going on in every single market, not just the metals market. It goes on in every market around the world. And the governments are involved, and the governments shy away from it because the banks are making a lot of money, and the banks and the governments don't want to, fight the banks, obviously.
And what's very interesting about all of this is that there's a site called usdebtclock.org, and down at the bottom right-hand corner, they have what they're saying is the true value of gold and silver. And they're saying that gold is around 9,000 per ounce and silver is around 1,000 per ounce. But when we look today, that is not the case. Do you think these are the true values of where gold and silver should be?
Well, I'd love to see $1,000 an ounce silver. I can tell you that. We're running the, second largest silver producer in Mexico and one of the primary silver producers in the world. I'd love to see $1,000 silver. Whether I will ever see it in my lifetime, I don't know. The ratio between mining, or the ratio between gold and silver mining on the planet is 9 to 1. So for every ounce of gold we mine worldwide, we mine 9 ounces of silver. So that's a crazy ratio, and that tells you right there that silver is extremely rare, way rarer than anyone even imagines. And that ratio is actually dropping. Silver is becoming even more difficult to find grades are dropping, production's dropping. We've seen 2 consecutive years of silver production dropping. We've seen 30 years of silver consumption increasing due to electronics and automobiles and solar panels and battery technology and you name it. Silver's being gobbled up all over the place. Yet the supply is dwindling. So yeah, I think we should definitely be 9-to-1 gold silver. We should be trading at that. So if that's $9,000 gold, that is quite honestly $1,000 silver, and that number seems almost ludicrous to even talk about it. But those I'm not calling for $1,000 silver, mind you. I know there's others out there that like Ted Butler and so on who believe numbers like that can be achieved. But I've said many times on record that I think triple-digit silver is in the cards, and I think we will see triple-digit silver in the next few years.
I wanted to ask you about mining stocks, gold and silver, and if it gets too personal, let me know. I know people aren't comfortable talking about investments and things like that. But when we're in an economic crisis and, people are looking, to protect their wealth, I've been telling people, get physical gold, get physical silver, and you have Silver One Resources, First Majestic, and you're working with these companies all the time. You're working with mining. Can you, do you feel comfortable talking about your companies and what you're doing right now?
Well, sure. I do it all the time, and I'm quite proud of the companies that I've formed.
What are you doing with your investments in mining in Silver One Resources in respect to SVE? And in U.S., I think it's trading under SLVRF. What are you doing personally?
Well, Silver One is not my company. That's okay. One of my investments. So Silver One was it's a group of mining professionals in Vancouver who I'm quite familiar with. I've known a couple of them for a few years, and they're well respected mining professionals. They approached me. I'm the chairman of First Mining Finance, right. And First Mining Finance had some silver assets, and they wanted to acquire those assets. So I was happy to structure a transaction. We sold those assets to Silver One. So First Mining Finance now is a large shareholder of Silver One. Just because of my relationship with the people that are running Silver One, I help them out. I'm there to advise them, based on my experience. And, I've been in this business for 34 years. So I tend to be, fairly helpful, at least I hope I am, and hopefully they would agree with that. But, look, if there's things that they're needing, if it's advice on particular assets, if it's due diligence, if it's people, in regions around the world that they need to access to look at certain projects, my tentacles go quite far, and I can help out quite a lot when it comes to, assisting them in making decisions for acquisitions and so on. So that's really what my role is. I'm not involved in management. I'm not involved in day-to-day. I'm simply a shareholder, a significant shareholder personally, as well as First Mining Finance also is a significant shareholder. So we're there to help. I think it's, in the space, silver is a rare animal, as I said earlier. First Majestic Silver is a producing silver company. It's one of the most respected silver companies in the world. It trades on the New York Stock Exchange under AG. It trades in Canada under FR. As I said, it's very well respected, but that's a producer. So, it's a different animal. Silver One is an exploration company, early stage. It's only been in public for, I think, less than 6 months, 4 or 5 months has been public, and I know they're out there aggressively looking for assets, and I'm optimistic that the management there will be successful in acquiring a pretty good portfolio of silver assets. And unlike First Majestic, who's very much focused on Mexico, well, actually is just purely focused on Mexico, I should say. Silver One is actually focused globally, so it's they're looking around the world for silver exploration projects, and that obviously interests me, because of the potential of potentially acquiring good silver assets globally.
Many people write into me and ask me about mining stocks, and is that a good type of investment? And of course, I don't give investment advice. What I wanted to know from you personally, when you're looking at some type of economic crisis, why is mining, because I hear a lot of people talking about mining stocks, and I don't own any mining stocks whatsoever. Why is that also good to have with physical?
Well, the ownership of physical and mining stocks are, really completely two different things. You could go buy, a gold ETF or a silver ETF, have a 1-to-1 correlation to the movement of the metal. So you can just buy and sell that like any stock, and its correlation is 1-to-1, as I said. Or you can own the actual physical metal. I own metal. Every year I buy a little bit of gold and silver and put it away. I've been doing that for years now, and it's just part of what I do with my money. And I would recommend other people look at potentially doing that as well. But the metals are volatile and so on. But if you look at gold as an asset over the last 20, 30 years, and you compare it to the purchasing power of the underlying currencies that it can trade in, gold's done fairly well. So I don't mind having some physical metal in my portfolio. But it comes down to, individuals' wealth and their risk tolerance and all those kinds of things, right? So it's not up to me to be giving people advice on really, what they should be doing. But from a personal perspective, that's what I do. Now, when it comes to, mining stocks are crazy. It's like, stocks on steroids, basically. They can go crazy if metals are moving higher, and they can just be devastated if metals go lower. We saw an environment, back in when silver hit a high in April of 2011 and gold hit its high in September 2011, and since that period of time to the low, which is really, I guess, about January 2015, 2016, we saw many of these equities drop 80 or 90%. And if you own these stocks, at close to their highs, 4 or 5 years earlier, you would have substantially been hurt. So when people invest in mining stocks, they have to be aware that, these are extremely volatile investments. If you catch them right, when the market is moving and a bull market is obviously in place, you can do really well, because even just this year, I told you the First Majestic story. The stock went from $4 in January to over $20 by August. That's a pretty impressive move. It's now back below 10, unfortunately, which is, goes back to the volatility. So we had, silver go from $13.50, let's say, to 21. So you had a, $6.50, $7 move, and the stock went up 6 times. And then you have silver go down from 21 to 16, where it is today, and the stock goes down by approximately 60%. So you've got to really either really be a good market timer, which many people aren't, or you've got to have a stomach for this kind of investment. When looking at the mining sector, always, if your listeners are interested in investing in this sector, always look at the management team first. If the senior management and the board of directors have history wealth for investors, that is critical, because, quite honestly, there's, 3,000 mining companies on the planet, and many of them own projects that are really not that great projects, and they're in jurisdictions around the world that are really, really, really difficult to operate in. So you have to have, good people and good projects. So, good people generally have good projects, and they generally know the environment they're active in. They generally pick decent jurisdictions because they know the challenges of running a mining company. So everything starts with people. And, in the case of, I pat myself on the back a little bit, but in the case of First Majestic and First Mining Finance, we're run by extremely good management teams who have created, millions and millions of dollars worth of wealth over the last 30 years. And, we continually try to do that.
Keith, when you mentioned stocks and the mining stocks, which stocks are you talking about?
Well, I mean, just stocks all around. I have my own portfolio, of course. First Majestic and First Mining Finance are my two babies. I'm the founder of both of those companies, and I could talk about both of them during this interview. But the other investments I have, like Silver One, like other companies, I always look at the management. And I mentioned earlier in my interview the reason why I decided to sell the projects from First Mining Finance to Silver One is because the Silver One management is a very good management team. And it always comes down to management. They have a better than average chance of success because of their pedigree. And that's critically important. They need to know how to manage projects. They need to know how to raise capital, and then they have to know how to build businesses. And, not just in the mining sector, but there's very few executives that run public companies that actually know how to do all that.
So many people are looking at gold and silver, and they say silver in the long run is going to be a better investment. Do you believe that?
Well, absolutely. I think that with me, maybe I'm biased, but maybe I'm crazy. But when I put together First Majestic Silver, back in 2002, I called for $50 silver. I said we're going to see $50 silver, and we did see it. It did happen in April 2011. I didn't think it was going to take 10 years, but anyways, it did eventually happen. And nor did I think that we were going to see 50, and then all of a sudden it was going to crash to, $13.50 or $14. But nevertheless, I got that part right. I'm now expecting to see triple-digit silver. I think that we're going to see silver in the 140 to 150 range within the next 3+ years, and I think that's reasonable. You look at what's going on in the silver supply and demand space. We're creating very exciting batteries. We're doing a lot of work in clean energy. Electric cars, fuel cell vehicles. There's a whole bunch of stuff happening in technology. The whole planet is trying to electrify itself in a clean way, getting away from the fossil fuels, getting more involved in technology to electrify the planet, and that is just all fantastic for silver. So I think the silver story is probably the best story out of any commodity on the planet, and investors should really look at silver because it is, in my view, the best metal. And yes, of course, I do think it's going to outperform gold. I'm a bull on gold. I'm not, I wouldn't have put First Mining Finance together if I didn't like gold, because it's got one of the best gold portfolios there is in the world. And I put that together over the last 2.5 years. So, but nevertheless, if we see $2,000 gold or pick a number at 9 to 1, you're at $180 silver. So that's what I'm expecting is going to happen, and I'm sure it will.
So I wanted to move on to the economy right now. We know Obama in the United States, he's leaving office, and we've seen the economic numbers that the government is putting out there. And everything looks fantastic if you look at what the government is putting out there. But if you look at the hard data, we see things are really breaking down, and many people are looking at the economy saying that this whole thing is one gigantic illusion. When you look at the economy and you're on the front lines with precious metals and with mining stocks and with your companies, how do you see the economy doing right now? What direction do you see it going? Do you think it's actually improving, or do you think that the economy is not doing as well as they're saying?
Well, I think that our whole system is designed for population growth and continued demographics that have gone on since the 40s and 50s and 60s, and the entire pension system, the whole government systems, design, taxation system, insurance system, everything's designed that way. But we're going through a major demographic shift that's going to last over the next 20 or 30 years, and jobs are going to change dramatically. Industries are going to disappear. There's just a lot of stuff going on that governments, the insurance companies, pension funds, and so on, they can't manage. So, it's interesting to see, that these headlines now, fake news. This seems to be this new catchphrase that's all of a sudden caught on because of, the Trump election and so on. But fake news was created by the Americans in the 70s, and actually probably even in World War II, even earlier than that. There's evidence around fake news even back as early as that. But when governments are actually creating articles in newspapers and trying to manipulate its population to go in one direction or another, this is normal course. And so anything that a government says, unfortunately, today cannot be trusted. I'm optimistic that we are going in a different direction. We had the Brexit situation, we had the Trump situation, we've got other key elections coming up in Europe. So I'm optimistic that the old guard is being eliminated, and the new younger generation that isn't going to put up with the crap of the past will hopefully rewrite the system, and we won't see manipulation in the markets. We'll actually come to a time where we actually see true supply demand fundamentals affecting marketplaces, and governments will actually be transparent in the monies that they spend and where they spend it, and so on and so forth. And we're not there today, obviously, but I am optimistic that we will get there eventually.
Do you think we'll have to go through an economic crisis first to get to what you're saying?
It's probably, the governments don't like to move. They don't like to change. And, we saw, the Brexit thing obviously was a big surprise, Cameron resigning the following day, and the stuff that's going on elsewhere in Europe, and, of course, the Trump phenomenon that's occurring. These kinds of things, may be enough. I don't know. I don't have a crystal ball, but, we do know that this fiat system, is imploding upon itself. The debts around the planet cannot be paid for. There's no hope in hell that the governments are going to create enough taxes, to pay off their debts. So how's that whole system going to unravel? I think that, whether you call it a reset, whether that reset is forced by some type of catastrophe, multiple banks around the world implode, or whether it's central banks imploding, or what the catalyst is, it's pretty hard, for us to sit here and really determine what it is. Even listening to Jim Rickards, and he throws out lots of very useful ideas, but he even says himself, and he's a lot smarter than I am, that it's difficult to really tell what the catalyst is going to be. But there is going to be a shift, whether it's tomorrow, whether it's 2 years from now, 5 years from now. It's really unpredictable, but it's going to change the way that we do things, I think, and it's going to change our currencies. It's going to change governments, the way they work together, and so on. I think it's all going to be for the better myself, but maybe I'm overly optimistic.
Keith, for my last question, we've seen the central banks, they've created bail-in documents. We see them trying to ban cash. I mean, in India, we see they've banned the 500 and 1,000 rupee, and it made it very difficult for the people to buy physical metal. Many people are worried about, of course, banning cash, but also when we're in an economic crisis, the government's coming after their precious metals. Back in 1929, we saw that they really didn't confiscate it. They said, listen, give us your gold and we'll give you some paper and ink. And then all of a sudden, after they received all the gold they needed, they upped the price to, I think it was $35 an ounce, and they gave the people $20 an ounce at the time. Do you think this is a worry coming up in the future, or do you think that we don't have to worry about the government looking for gold and silver?
Well, an interesting article came out just a couple of days ago, and even I was surprised to see it, but I probably shouldn't have been surprised to see it. There was another WikiLeaks document that came out. It came out from the 70s, some communication between the United States government and the UK government regarding the creation of the futures market for gold. And as you took the United States off the gold standard in 1974, and a few years later, I think it was 78, if I recall from the article, that the governments decided to create the futures exchange in order to trade gold in the form of paper. Because prior to that, gold was only traded physically. And in the correspondence between the U.S. government and the British government, the U.S. government wrote very specifically in this memo that this created liquidity in the market will prevent, or they used another word. It was almost discourage. I think the word was discourage U.S. citizens from buying physical metal. And it was quite interesting, and it went on for a couple of paragraphs, but it was very clear that the creation of the futures market for gold by the governments to allow it to occur was for the sole purpose of trying to dissuade individuals to hold physical metal, because they wanted them to either hold paper metal, or they wanted them to be discouraged by owning the metal at all, because they would never let it move as people thought it would move. They'd always have this price suppression scheme in place to dissuade people from actually owning it. And gold, obviously has become in some cases the hated metal, just because we all think it should be much higher, but it's not. And because there's always this secret hand over the market that's preventing it from doing what it should be doing. And it's very clear that the governments don't want the metal to go higher, because they're competing against gold with their own paper currencies.
Keith, I really appreciate you being on the X22 Report Spotlight. Thank you very much. Once again, how can people see your work, and what are the websites they can go to see your different companies?
Well, I'm on Twitter, Keith_Neumeyer at the Twitter account. You can find me there. Things like that, Zero Hedge article, the one I just mentioned about the futures exchange, I did tweet that out. I don't do a lot of that stuff, but I send out high level important things that I think people might be interested in. But of course, First Majestic Silver, we didn't really talk too much about my companies, but First Majestic, it's a multi-billion-dollar company. It's or at least $1.5 billion company. It's one of the largest silver producers in the world. And, of course, First Mining Finance, it's a gold accumulator. It's got 25 assets. Both websites, please feel free to go to them, firstmajestic.com and firstminingfinance.com. And, of course, we did talk a little bit about Silver One as well. But, I would, caution or at least advise your listeners, they should, do their own due diligence. They should go on the websites, read the information, even contact the companies and really learn to understand them and see if it fits their portfolios. But, if you're wanting exposure in silver and gold, any one of these three companies are all very much different. And they all meet different investment criteria or fit into different investment portfolios, but they're all very interesting companies.
I'll be putting all the links at the bottom of the video for First Majestic, for First Mining Finance, and Silver One. So just look at the bottom of the video. You'll see all the links there. Keith, once again, thank you very much for being on the X22 Report Spotlight. I appreciate it.
Well, thanks again, Dave.